Stephen Mead again. Thank you, everybody. Davos Lodge, Monaco. Wednesday, some of us have halfway lost our voice, so the week is moving along, but this will be great. So two people who are super excited met earlier, Jürgen, right? And Lena, two different companies. So we're going to cover both. We're going to talk about the world. We were actually going to do a panel on sustainable super yachts, which is a category underneath what we're actually going to talk about now, which is broadly defined as sustainable shipping. And massive, I've got some numbers here you guys provided me, which is great, but I'll let you guys describe it. In terms of the impact in carbon on a global basis, right? People don't normally think of shipping, the big cargo containers. Jürgen, talk to me a little bit about kind of the stats and the impact on the shipping on the environment.
You see, from my background, I'm a chief engineer, so I have been in that merchant business, maritime business now since 30, 40 years. And the merchant marine industry is contributing to 90% of the global trade. So all goods traded around the world, 90% done by merchant shipping. And the merchant shipping is at the same time the largest single CO2 emitter in the world, contributing 2 to 4% of the overall global CO2 emission. And just to give you a number, that's roughly 1 million tons of CO2 every year, more than Japan has as a whole country, as one single emission source. And the reason behind is technology driving the ships are internal combustion engines. And they run on heavy fuel oil, fossil fuel, and this creates a huge consumption of CO2.
And just to be clear, because the term shipping is so broad, we're talking about big container ships.
We talk about all kind of merchant ships.
Okay,
big container ships, yes, but big container ships contribute only maybe 4,000 or 5,000 ships to the whole 110,000 ships globally at an average age of 20 years, 15, 20 years. And the fleet is continuously replaced. This means whatever is now contracted for new building pollutes the world for another 30, 40 years.
And we could talk about that. There's attraction. So even, and I'll go back because we have a little history of that. With the super yachts, you can have a new build or you can have a retrofit. Talk to me a little bit about your product and whether it fits in one or the other or both. I think it fits in both, correct?
Correct. The product as such is a solid oxide fuel cell, which is specifically designed for industrial application in the merchant marine market. And it could be used at a retrofit, especially for electricity power generation on board of all ships globally, including super yachts, but also for new ships, for a new powertrain. It could replace the whole diesel engine. So we could make the whole merchant shipping not only emission-free, if we use at the same time synthetic fuels and CO2 capturing, we could recycle our fuels and we would reduce the emissions by about 140%. Means as more ships are trading with our powertrain solutions, as lower the global CO2 consumption gets.
And again, I've got some great notes here from Lena. Thank you very much. It talks about a dual fuel approach. Explain what that means.
Traditionally, like also in your car, you either have gasoline or you have a diesel engine. And on ships, usually you run with heavy fuel oils. However, to be prepared for the future, you need to be prepared for e-fuels. You need to be prepared for LNG, for e-methanol, for ammoniac even. And dual fuel capability means that your powertrain is capable to work with both old traditional fossil fuels, but also at the same time with the newest e-fuels. And the advantage of our powertrain, the POF solution, is that it can run in parallel with the existing engines, whatever is required on fuel. So any fuel having a kind of hydrogen in its fuel chemical content can be served as our energy source.
All right, so I have a simple way to explain this. I think now that I understand it, it's the difference between gasoline and diesel in an engine. If you're running gasoline and you put diesel in, the engine might blow up. If you're running yours, you're saying no matter what fuel comes out, your powertrain and engine is capable of taking the fuels now and in the future. Is that correct?
Exactly, and the biggest difference is we don't have the internal combustion engine. The diesel engine, internal combustion engine, has a maximum efficiency which is now reached, which is approximately 50% for the whole installation, including heat recovery. But our solution provides an overall efficiency of roughly 70%. So only by this increased efficiency we can reduce the fuel consumption, we reduce the emissions, but at the same time we have the fuel capability. So a fuel cell is not an internal combustion engine. It's a chemical process, and the exhaust gas which is coming out is much more clean and much more easy to treat afterwards.
And so where do you see the potential of that in terms of as not only new facilities and new ships come online, but also the retrofit side?
All new ships which are currently ordered could use our solution immediately, replacing the auxiliary powered diesel generators which are on board of a ship to generate electricity. And for ships requiring a propulsion power up to 3 megawatt, our POF solution can provide the whole powertrain electricity solution, so no internal combustion engines are required anymore, no more CO2 emission, no more pollution to the air, and no more noise pollution into the water.
Wow. And I know financing is always a big part of these things, as they don't come free, and so that'll segue into Lena. You guys have something, in the US we call it different. You introduced it as a blended finance facility. Talk to me a little bit about your company and what a blended finance facility is.
Thank you. So I'm the program manager at the SDG Impact Finance Initiative, and we're a blended finance facility which was originally set up in 2022 by the Swiss government, together with the UBS Optimus Foundation, and back then also the Credit Suisse Foundation. And since last year, we've also been joined by the Luxembourg Ministry of Finance, and we continue to work with different governments and also foundations. And what we basically do is that we pool development funding as well as philanthropic funding in order to reinvest it then in the form of grants or also first loss or concessional capital into financial vehicles which target impact investments in developing countries. And so that's, we reimburse, and it's a more efficient way perhaps of also development funding.
It's fascinating because in the US we have a structure called a DAF, a donor advised fund.
So we are set up as an association. I think that's very important, and any kind of profit that we would, for instance, or returns that we would generate through our first loss investments or equity investments would be reinvested. So it's really a full cycle and trying to bring more capital towards those new impact fund solutions with the ultimate aim to mobilize private capital. Looking at the UN SDGs and also the challenges we have in innovation technology or decarbonization, and beyond that, all the UN SDGs, it's not going to be completely done by government funding. We need to mobilize the private capital, and we try to do this through this blended finance approach by supplying concessional capital so that funds and new financial vehicles can hit the ground running and can cover any initial losses, so that then private investors can come in at market rate and hopefully also further invest into those profits.
Yeah, and the early capital in is always the most difficult, so yeah. You guys have a great structure. In terms of maritime and decarbonization, I know that's an area of interest. Talk a little bit about that, but then also what other areas would the association be interested in?
So especially when we talk about maritime decarbonization, there are a lot of different environmental fields that come into that. So on the climate SDGs, we of course have climate action, we have life below water, but also on land, and looking at as well at the economic impact it has on developing countries. When we look at the impact of rising water levels, this will immediately impact especially populations living in developing countries. However, if we look at the more positive side and the opportunities to invest in decarbonization solutions, a lot of, especially when we talk about the demand of e-fuels, it's a huge investment opportunity. And we also see a lot of forecasted job growth and economic growth, specifically in the global south, because those are just perfectly positioned to also be the main providers of e-fuels and looking at the infrastructure around it. Specifically talking about the maritime sector, we've recently seen quite a lot of initiatives also. I think later on we have a few foundations talking about that as well. Green corridors. So looking at green shipping routes, where not just the vessels run on green fuels, but you need the entire port infrastructure for that as well. So you're talking suddenly about a whole new ecosystem which is developing around that. And there's a huge opportunity to build and really resilient economic structures in developing countries and help to those countries to also benefit from this transition and to enable a green transition in those sectors.
And I'm going to transition back to you, Jürgen, because we looked a lot, again, with green bonds and the financing, we looked at doing some hydrogen. And then we were working, look, Mitsubishi was trying to do power plants with hydrogen. The challenge is they don't have any place to get the hydrogen. And the hydrogen people can't build because there's not enough power plants. The fact that yours can go in now and work across multiple, fuel lines, what can you explain that we'd be able to understand? How does it actually work differently than a single source engine?
Mitsubishi is also working on SOFC capable of working with different fuels, but hydrogen is a natural source of driving a fuel cell. So the capability of this fuel cell also to operate on methanol and on ammoniac, for example, are the future fuels in merchant marine shipping. So all the new internal combustion engines, which are called alternative fuel capable, and we have about 4,000 to 5,000 ship orders already with these alternative fuels. They could be added on top with our electricity power generation by the POF fuel cell. So the dual fuel capabilities and the various fuel capabilities is crucial. Hydrogen in merchant marine is not the fuel to be selected because storage on board consumes too much volume. Same would do with, if we would only apply batteries, it will call for too much weight carrying capacity of the batteries. So the main purpose of a ship still remains of transporting cargo, not its own fuel or not its own energy.
And so with the fuel cell, then talk me through just how would the input work? If there's, pick a fuel, so now you have a fuel and a fuel cell, how does that input work? Is it done at port to get it across the shipping line? Is it something regenerated on the line? How does it work?
The fuel will be bunkered like on traditional ships, so there is no change with regard to the bunkering and treatment of fuels. For example, if we take methanol as a future fuel in merchant shipping, it will be the same bunkering rules, it will be the same class and flag regulations for handling and of the fuel, but the POF fuel cell will be directly capable taking this methanol without any reforming beforehand and reusing it and generating the electricity by a chemical process. In result, yes, there will also be CO2 generated, but this CO2 will be captured after the fuel cell production and recycled, used as an inner gas, and recycled to generate new e-fuels.
Again, I love future tech. It's always exciting when it works, and it will. But also, let's go back to Lena. The scalability you need as an investor at your size, what do you look for in terms of investments? Do you look for something that's going to scale? Do you look for something that's going to return? Do you look for something that's going to impact the environment and you're less focused on return? What's your lens with the association?
So I think for us, it's very clear that impact comes first, and impact and being additional. And additionality also means being able to mobilize private capital. The challenges that lie ahead and the 4 trillion funding gap, which has been growing rather than being reduced towards the SDGs, cannot be met by governments alone, and it cannot be met by the private sector alone. So we need to collaborate on that. Now, from a blended finance approach, our mission is to de-risk these kind of solutions. When we talk about innovation technology, when we talk about climate tech investments, very often you suddenly start talking about risk. You just mentioned it if it works, right? So we need to, our role from a blended finance perspective is to find solutions and investors which are looking for solutions as such, for instance, that are really at a technological readiness level of 8 and so on. We know that they've been developed, they've been tested, and we need to now focus on commercialization. And if we find those funds that then can support these kind of scalable technologies, then we also have achieved our missions and we have this chain reaction that we need. And I think in regards to this, scalability is the key, not just from an innovation perspective, but also financing. And just this morning, I was at a panel as well, looking at the status of climate tech investing and also what's the main barriers. And I think there's a lot of VC funding available to get certain technologies also to this TRL 7 and 8. But what we're lacking is commercialization of those technologies. When you look at some of the IEA reports, we are heavily dependent on these technologies which are today at the status of TRL 8 in order to reach net zero by 2050. However, there is a huge funding gap to then invest in the commercialization, often traced back to uncertainty, the risk, and it being too costly. But as with any kind of innovation curve that you see, you need to get over this critical mass. And only then will you be able to achieve unit economics which are attractive and which make it cost competitive to the current status quo. And so from an investor perspective, I think it should be the key priority to find those solutions which are ready from a scientific point of view and where you really focus on the commercialization and being able to deploy them at a scale.
And that's what I find fascinating, because an investor has a completely different lens. Somebody that donates from a philanthropy standpoint has a different motivation. And I can see why you call it blended. Again, we call it donor advised funds in the US, but the blended view that you have is, how can you get into something that may be early, but needs commercialization and needs proof, and then can then scale with additional capital? Is that correct?
Yes, so we are here to de-risk. So what we do is high risk in order to then de-risk it for institutional investors, for hopefully at some point retail investors. And this is, I think, the key to overcoming this barrier which is currently preventing these technologies to really scale and commercialize. And this is where this blended finance approach, and it doesn't only apply to tech, it also applies to biodiversity, to health, any kind of sector where you're seeing that new critical innovation is required, new investment is required in order to make the risk-return profile attractive and also capable for the requirements that institutional investors have to meet.
And I'll ask you a final question here from an investment standpoint. What's a typical investment size for you in terms of check size into the project? And is there a certain valuation you look at, or is it just basically check size and commercialization?
So at the SDG Impact Finance Initiative, or CFI, it's a bit long, we specifically work on a call for proposal approach. And we, on the one hand, we provide grants to financial innovation, so bringing new financial products to the market. And here we have around 2 calls for proposals per year, where we look at ticket sizes between 150 to 500,000, mainly financing feasibility studies and expansion projects. But then when we look at our first loss equity investments, that's our second product window. Also here we operate on a call for proposal base. We invest currently up to 5 million in up to 3 funds, and this twice a year. So, and regarding return perspectives, our key focus here again is actually at the impact, the additionality that the fund can have, and also their ability to mobilize private capital. Now, if you want to mobilize private capital, you also have to have an attractive return profile at some point. So we don't have that as a key requirement because additionality, that is the key. But we, of course, this goes hand in hand. Now, in terms of the impact or ticket size as well, I think it's important that a lot of the additionality we have, because you could say if you have a 5 million ticket, it's not the biggest impact, but we often participate in first closes. And I think this is key, that even if a fund has a few big investors, we've often come in and managed or enabled those funds to do a first close and then be able to attract further capital. So a lot of additionality also comes for that person.
So there's 2 sayings I have, because we raise money all the time. One is it's not always venture capital you need, it's vision capital. You need something early. And I tell anybody raising capital, everything you need to know about raising money, except what Lena just told us, is 3 words: capital follows customers. And so if you can bridge that gap to customers, commercialization as you call it, but customer acquisition, that's a gap that a lot of technologies will get to a point and need to cross. So, commend you guys for doing that. So Jürgen, under the impression that your fuel cells are in, everything's going, people are buying, ships are going, what can you foresee the global impact of something like this on the
global impact will be huge, and our customers, means the ship owners, ship operators, are really eagerly looking that we could supply our POF as a receive solution. The issue is that this initial financement or financing what you just talked about. This is the crucial point on our side, which is still missing. So we have investors behind us who are prepared to invest 200, 300 million even into our gigafactory. But the first more risk investment, this is a part which is still open and where we believe that it still can be closed. But if there are still funds or investors interested in investing in the first shot, it would be more than welcome. The industrial issue, and if you look a little bit in the histories, when the diesel engine has been introduced 110 years ago, it replaced the steam engine at that time. And to do that, it was crucial that the factories building that engine could do that at price parity to the steam engine, that the new diesel engine was more energy efficient compared to the steam engine, and that the whole production could be industrialized. The issue we are facing with the solid oxide fuel cell, the manufacturing is completely different. So the factories now building diesel engines do not build fuel cells. And this is why we have, for example, in Germany, the issue now with the car industry. They are not prepared for new technologies, nor are the merchant marine. The price parity we can reach, but only with having a dedicated gigafactory. So we need to produce a fuel cell en masse from the beginning. And that's a crucial point. But once we have that en masse, our efficiency is 20% higher. So we have the three topics reached, and it will replace the future. The future ship propulsion powertrain market will be more fragmented. It's like in the whole electricity generation with households having solar panels, with wind generators distributed over the nation. So you don't have the single sources anymore. And it will also help developing countries in the future, because the fuel cell can generate power, electricity generation on small islands, on developing country in certain sites. So you don't need to develop the whole infrastructure. So we are very sure that not only for merchant marine will benefit from the fuel cell solution, but also other industrial applications, island, and even yachting.
And the environment.
The environment will benefit from the beginning, and it's unfortunately the environment is not a beneficial factor currently from commercial aspect, and that is a huge disadvantage. But with the, for example, upcoming EU CO2 trade, which is more and more also punishing CO2 emissions, that will help us a little bit feasible. But again, customers are waiting.
Go ahead, Lena, in closing.
Maybe just to add to that as well, I think we've often heard when we talk about mobilizing more capital towards the SDGs and so on, that regulation plays a huge role. There is regulation in the maritime sector as well as through the IMO. It's not known to be the fastest regulatory body, as we've seen in the last century. However, I think also when we look at new supply chain regulation, requiring companies, alone in the EU with CSRD, to have cleaned up supply chains. This is a huge driver. And luckily, hopefully, this can be a key driver also outside of regulatory jurisdiction and be a key competitive driver for not just the economic development in the current markets that we see, but also, again, help establish the economic growth that we need.
And it's the entire industry. It's not just the powertrain. It's the whole industry that needs.
It's the entire merchant shipbuilding industry which needs solutions. So the powertrain, that's the operational part, but also when we talk about shipbuilding, CO2 neutral steel, that all gets in. But the good message is it is possible to provide this CO2 carbon-free shipping. It's possible. That's a nice message we are having.
The great thing I like about yours is it can transition to multiple fuels. So as fuels come on, or different regions that may have different fuel requirements. So let's close. Let everybody know the company name, how to get hold of both of you, in case there's people out there that want to support the mission and the cause in the association.
Would be pleased. We are here the whole day. We are also here tomorrow. So our company Xinfinity, who is supporting the POF initiative, is located in Zurich. And the gigafactory we also want to build here in Switzerland, which, by the way, is the heart of the diesel engine production for merchant shipping. Nobody believes it, but the diesel engine for maritime propulsion originates from Switzerland. It's a Sulzer diesel engine. I have made a book about it some 10, 15 years ago. It's called From the Mountains to the Seas. But Sulzer has been the main contributor of the diesel powertrain for merchant shipping.
They need to invest in yours because the diesel engines won't be here much longer.
The diesel engines, they will last longer. They will generate more capabilities. They will be able to work also with e-fuels. They will be capable of reducing their CO2 emissions. Also with diesel engines, you can capture CO2 emissions, but the efficiency of fuel cells, a diesel engine can never reach.
Lena?
So we're from the SDG Impact Finance Initiative, and we're based in Switzerland, but we are an international initiative, and we really look forward to collaborating with philanthropies and governments all around the world. I think we are facing an incredible challenge, which we can only master together. So it is our ambition to tackle this together and also use these kind of innovative technologies and the advancements in these to also foster stable and economic growth and green economic growth, specifically also in developing countries.
All right, guys, thank you so much. Thank you for everybody.
Thank you very much.